following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that you can be. Market-wise, let's take a look at it out here. We have the Dow Industrials up 127, NASDAQ up 70, S&P's up 16, gold contract flat at $1,186 an ounce. Silver down 7 cents at $16.67 an ounce. Platinum down $7 at $1,119 an ounce. Copper down 3.5 pennies at $2.81 a pound. Light sweet crude off 47 cents at $57.56 a barrel. Bonds, we have the 10-year flat, 127.27, 30-year up 8 ticks at 156.15. King dollar up 73 ticks, traded at 97.48. The euro is up 15 at 108, and the yen is up 79, trading at 123.89. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, so check it out. What we have is this. You get an expansion of price out here today. You're up $1.99. The SPYs right now have done the 159 million shares as it's moving up on price. The aspect of how we went down versus how we went up is pretty dramatic. We came down. It certainly got the price back. Yesterday, we went from a 212.90 down to 210.20. Today, we're at 212.75. We're almost right there once again. Bottom line is that you're at 59 million versus 124 on the way down. You know, we'll see whether it's going to hold price coming into this close out here, because right where we are right now, anything over this 212.24, which we're 50 cents over it, is saying it can go to those highs. Where I'm going with that, folks, is that that was the first high that was generated out there on the 25th of February. Now, we go into the 3 Qs, the NDX 100. NDX 100, right now, the Qs themselves are trading at a high. We are at 110.99, and the Qs now have some force behind it. We came down yesterday with 25 million. You're going up today with 20 million. It needs more than that, but there's certainly force there. Inside that NDX 100, which is pushing this forward in a dramatic way, is that in the middle of the day at 2 o'clock, Broadcom and AFCO Technologies, there's rumors that AFCO wants to take over Broadcom. That sent Broadcom up 20%, up $9.78. BRC. Wide price spread, accelerated volume, all of the above. Well, what it also did is it also sent AFCO Technologies up too. The leaders inside the NDX 100 today go like this. You get Broadcom up $9.68, AFCO is up $12.40, NVIDIA is up $1.08, and SanDisk is up $2.95. Taking it away, you know, some weakness. Not that there's a weakness in the NDX 100 today. You have Checkpoint Software is down 222. Green Mountain is down 126. Charter Communications is off 222. And Wynn Resorts is down 78. We go into the small caps. You take a look at the IWM, which we have with the IWM out here is this. The Russell 2000, the IWM is trading at 124.66. That also has anemic volume. It had 22 million shares, you know, versus this 44 million. So when you do look at the context of the S&P and the small caps, they're going up dramatically lighter volume. NASDAQ, that's going to be a toss-up. The actual composite, okay, whole different ballgame. The composite right now it has light volume, but the composite looks like it's going to close at highs. The composite right now is trading at 51.06, and I believe that close. That's good. If we stay right there, that's a closing high. That's a closing high. Gold contract. We go take a look at the gold contract. What we have with gold is this. Gold out here today is traded in a narrow range. We've traded from 1183 to 1190. Volume is 184,000 contracts. What we needed, folks, is we needed that contraction of a volume. Now we need a sign of strength coming into the gold market. Bottom line is that you came down with some real juice yesterday. You got underneath that today, and we're trading right above it. You know, so that's basically that's a test. Has lighter volume, but now you're going to see a sign of strength. If we look at the GLD, the Street Tracks Trust, what you have with the GLD is this. Huge contraction of volume, which is really wild, which is great, you know, if you're a bull. You're talking about 2 million shares versus 12 million. So bottom line is that there's no sellers at this particular point in those markets. If we go over to King Dollar and we take a look at King Dollar, what you're going to see is this. It's pretty amazing, actually. King Dollar, folks, from the highs that were generated out there in March to the lows that were generated in May, we did a counter trend bounce right to the 0.618 retracement. I mean, right to, it was, when we talk about to the ticks, it's about as close as you can get. The actual tick value was 97.856, and we did 97.880. You know, we'll see if, in fact, that's the end of that counter trend bounce. The volume characteristic and how it backed off is saying more than likely you're going to see this back down. We'll see as we back down, do we back down with any volume behind the move? Thus far today, we've done 54,000 contracts inside the dollar index. Well, that's going into 71,000 as well as 76,000. So bottom line is that when you look at that context, the dollar index, if it wants to go a lot higher, it should have more juice. Bond market, we go into the TLT, the 20-year plus. What you're seeing with the 20-year plus is this. This is looks like it's on a counter trend bounce. It's anemic out here today. Now, this is what's pretty wild watching this whole thing shake out. What we have inside the bond market is this, is that we are at 122.58. We've done 5 million shares today. Yesterday, you did 10 million. It hasn't been able to make the swing point yet. The swing point inside this bond market is 123.55. You know, when you can't, well, I suspect we're going to get to the swing point, and that's where the market wants to talk, walk, and squawk. But with the acceleration up yesterday, it's like, you know what? This looks to me like it's still a counter trend bounce in a bond market that wants lower price, higher yield. And the 10-year today, we've done 252,000 contracts. I mean, 2.5 million, which is good. So, and the 10-year is saying we're at 127.27. That is saying that we're going to go after 128.06. That's where the swing point comes in. The 30-year, we take a look at the 30-year. 30-year right now is up 6 ticks, getting close to that swing point, and it has juice behind the move. Not as much as yesterday, but you still get good juice. We're at 333,000 contracts. We're at 156.13. The swing point up there is the 157.12 area. So what I do expect you're going to see it get up into that area. We'll see whether it can overtake that area. Some of the high volume stocks in this low volume market, excluding a couple NDX stocks, Michael Kors is just getting absolutely smoked. That's down $14 at 46.33. You get Apple up $2.50 at 132. We get, let's see, Microsoft's up $1. You have Ford Motor up 17 cents. Coach is down $1. If we go over to Michael Kors for a second, and this is what you have had in this marketplace, which, well today you definitely have Broadcom and AFCO, which is up. They're both up big. Michael Kors, this, you talk about a destroyed stock. This is about as intense as you get. This stock has gone one way from $101. We're at $46 right now, and it looks like this is, oh man, this is. Where is the bottom? You know where the bottom is, folks? The bottom is down there at $20. Pretty sick. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back. Dow's up 134. Nasdaq's up 74. S&Ps are up 17.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You have the Dow up 142, Nasdaq's up 74, S&Ps are up 17. Some of the Dow stocks out here, this is what you have happening. In fact, let's go look inside it first. Yesterday, they were all red, and today, well, you still got a few red, but let's see. The laggards, Nike. Nike's down 80 cents. You get ExxonMobil off 39, American Express is down 9, and GE is flat. Bringing it higher. Microsoft is up $1.14. Intel's up 69. Apple is up 257. And Visa is up 117. A few of the other Dow stocks that are moving out here. You have Coca-Cola up 20 cents. Disney's up $1.12. Big Blue is up 211. We have 3M up 146. And if we go over and we'll take a look right now at Big Blue, because Big Blue just hasn't been able to basically get any traction for quite a while right now. What it did do is it finally made it over that 165 area. It has been trying to get over that area for quite a bit. The gap that is inside Big Blue, though, is basically still there, and that's where it's having a hard time getting up and over. This had gap down, folks, on the October 15th, October 16th, rather. And a gap down from the price point of 179 into the 168 area. That's where it's having a hard time getting into. And what you certainly have out here today, it's still having a hard time. So we'll see if, in fact, that can get any traction. Walmart, we've been looking at Walmart. Walmart is making its way back into its lower range. What you have out here today, Walmart's trying to bounce today with 5 million shares. That's just building more cars on the way down. Walmart did 10 million shares yesterday, so that is a building cause to get into lower price. We take a look at 3M. 3M today is up $1.43, trading at 161.02. What we do have out here, if we go back to the S&P for a second, and yesterday when we had a couple of the folks on, they were talking, basically about, hey, listen, each and every one of these downdrafts have been one-day wonders, and that's what we got once again. What you have is this: is that the S&Ps yesterday, basically break apart, go down, go down hard, go down 124 million. You back up today with 63 million. You are actually right at the beginning of how we went down yesterday. So we've actually hit the number. It's the number from the start off yesterday was 212.90. We've hit 212.90 right on the nose. This just hit it. And so once again, bottom line is that these highs are vulnerable to get hit. We'll see as we come in. It's you get 34 minutes coming into this close. The last time that we had any juice on the way up is about 50 cents lighter. If you take a look at this intraday, what you're going to see is that intraday it was at the it was at the 950 mark. 950 mark, that first expansion on the way up, that was a good expansion. That was 212.16. You can see the volume was right behind that move. From that point on, it's just been a push, push, push with light volume. What we will, I suspect, see coming into this close, that we'll see a bit of selling. Why? Because what you do have is that when you have an expansion like this after downdraft, there's going to be plenty of folks that were in here for the day, and they will be basically selling just to take a profit. Now that would be one side of the equation. The other side of the equation would be that the folks that had gone short, are they going to have to close their positions as this market is coming into the close? What I expect there is that these positions have already been closed. The reason I'm saying that, folks, is that the march forward today was pretty relentless. You know, basically every 10 minutes, this S&P was clicking up, you know, right from the get-go this morning. So what the market has done is this. The market has used a huge amount of energy, both going down and coming back up. The only indice that I see that, you know, basically has a shot to get up into and over the highs would be the NDX 100. The NDX 100, 22 million shares is a big number. And with the, as I said at the beginning, when that Broadcom and AFCO, when that came out at 2 o'clock, that sent each one of those stocks up. It sent AFCO up 15%, and it said Broadcom up 20%. The thing that's pretty amazing, I don't believe either one of those stocks ever got halted either. It doesn't look like they did. It looks like it was a one-way shot, topside. You know, AFCO at 13.50 hours, it was trading at $50, and now it's at 59. BRCM, this is really a rocket ship. This little baby was trading at the same time. Yep, 13.50. That was trading at $50, and it shot up to the $57 area. You know, it's pulling back slightly right now, but bottom line is that you had some juice behind that move. The dollar is going to be a big deal out here to see how if in fact this dollar counter trend move is over, meaning the move that as we start going topside, we take a look at this on a daily basis. And what you do have is that it did a perfect 618 retracement. It closed under the highs of yesterday. Well, it's actually right at it. We're at 97.48, and 97.47 was the number from yesterday. So bottom line, we'll see where that does shake out. The volume was lower, you know. So as you're looking at that, it's like, okay, is that dollar going to do a next leg down? Because what we certainly have had is this: we came down with good volume. What the dollar did do yesterday is it made it buy its huge downdraft from the 29th. The 29th of April, that's where the dollar had gone from 96.29 to 94.75. Now, we made it over that area, and we had some juice into it. So today out here is a huge day. Well, tomorrow would be a larger day, that's for sure. But this is a big move as to the 0.618 retracement inside the dollar. If we go over to the oil market, we take a look at the XLE. XLE, folks, still having big problems. These oil and gas equities, they want lower price. Sideways move out here today inside the XLE. But if you take a look at ExxonMobil, you're going to see that Exxon moving lower, below the price of yesterday, can't hold price. We're at 84.90. That's going to make its way down as 82.65. Chevron, okay, Chevron yesterday got hit pretty good. What you have out here today also can't hold price. What Chevron does have, Chevron is sticking out like a sore thumb. That has that high volume swing low out there at a price point of at $98.88. Now, what Chevron has done today is this. On the weekly basis, it already got back inside its large bar, downdraft bar. What it's done today is that on a daily basis, it's working its way into the highs of the high volume low that was established out there on the 30th of January. The high of that is 103.28. And right now we're at 103.17. And intraday, it looks like as we come into this close out here, it looks like they want to sell these oils a bit more, because what we are seeing is that you're seeing a little bit more pressure inside these oil markets, oil and gas markets. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to come in right back. Dow right now is up 131. Nasdaq is up 71. S&Ps are up 16. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials up 170, Nasdaq's up 70, S&Ps are up 16, and some of the leaders out here, you have Valent Pharmaceutical, that's up $4, 1.50. Let's see, Magna. No, that's a penny stock. That's not penny stock, but let's see. Yeah, a lot of these, that's giving me on that list is that way too small. One of the largest ones, no doubt, Broadcom, BRCM, and AVGO. Both of those are up big dollars. One looks like it's going to try to take over another. Now, let's go over and we take a look at the gold market, okay? First, we'll go and take a look at the XAU. So what we had out here yesterday is that you had the downdraft come inside the gold market and the physical gold as well as the equities. The equities, what we had, and this is always a bottom line, the XAU and the HUI, those numbers, those volume numbers don't come out to at night. Now, what we had there on the XAU, we came down with 30 million shares. Well, 30 million, you're going to need a lot more than 30 million coming down in because we're trading out at 68.75, and bottom line is that that baby was going up on 40 million, 30 million, and then the first initial expansion, I'll show you this first initial expansion. The initial expansion, when we came off that bottom in March, what we had is that was a monster, basically, day. It was probably a reshuffling of the XAU and the HUI, more than likely. And what we had is that at 67.68, we had 145 million shares. Now, you don't have to necessarily use the highest one there. There's no doubt about that. But what you can do is that as you go along, 40 million is a good number, and we are coming down with 30 million. What I expect you're going to see out here today is this. You probably did about 10, 12 million. You rejected the swing point at the 68.28. That was the low of yesterday. We're at 68.75. That's inside the XAU. If we go take a look at the gold bugs index inside the HUI, what you're going to see is this. Gold bugs index is trading out at a price point of 164.10. The gold bugs index had come down yesterday with 20 million shares, and that little baby is going into 17 million. So the XAU, this is interesting. So the HUI, when it did come down, the differential would be the HUI did come down with more volume than the XAU, number one. And what we have out here today is we do have a rejection of that lower price of the 164.03, but we're definitely going to need wide price spread, accelerated volume inside of that market. If we look at one of the strongest stocks that have been the strongest stocks inside both of those, it would be Rheingold Resources. Now, what Rheingold has done is this. Rheingold came down yesterday with 599,000 shares. That was going into 900,000. So that operated as retracement with lighter volume. When it had also come down, it took out its swing point that was established on the 7th of May. That also took that out with lighter volume. Now what we've done out here today is that rejected lower price, and it's starting to move higher. Let's go take a look at Royal Gold, RGLD. Why Royal? And we'll actually take a look at Franco-Nevada also, because both of these folks love to trade off of, they give you great signals as to where the physical price of gold is going to go. And the reason being, of course, is that the Royal Gold itself, they're both royalty companies. Everything they do is predicated on what the gross price of gold is. And what we do have with Royal Gold, she's moving higher. She never made it to the lowest swing point. The swing point we're talking about would be the swing down at the April 14th level, which is 61.21. And what we've done, which is just absolutely amazing, actually, is that when you take a look at this, is that we had broke the May 7th swing point. But the May 7th swing point, folks, in Royal Gold had 1.1 million shares. Well, we broke it with 522,000. What does it do? Moves topside again. Royal Gold's going right back to the top of the consolidation it's been. So that's giving you more evidence that you're going to see the gold market move topside once again. And I suspect where that all comes from is that we know it's the dollar that's moving everything. The dollar looks to me, we hit the 0.618, pulled off the dollar. What I expect you're going to see tomorrow is the dollar's going to be lower price. If we go over to Franco-Nevada, same deal. Really sweet deal on Franco-Nevada. So Franco-Nevada yesterday got down to a price point of 51.01. We did 600,000 shares. Your 600,000 was coming into 720, was coming into a million. Today you rejected lower price. You did 300,000. Franco-Nevada wants the highs. So this is going to be, well, let's do one more. I'm going to do SLW, because this SLW, Silver Wheaton, this was in bad shape a couple days ago. It was coming into its low, and it was coming in barreling with some really big volume. You know, yesterday what we did is that we get down to a price point of 1861. Now, so this Silver Wheaton, folks, is the largest silver broker in the world, okay? Picture how you have the royalty companies, but then you have a silver broker, and that's what Silver Wheaton is. So Silver Wheaton is a decent indication of the actual silver market, and this is a banking structure, you know, more than a royalty structure. But you're still talking a banking structure that does 600 million and only has 30 employees. So what we have out here today is also good for the silver bulls. And what it is that this was much weaker. You know, this had come off the bottom of 1794 in March. It had its day of strength big time, 3 days in a row, March 18th. The low of that was 1826, and the high was the 1919. Now, what we've done today is this. You got below yesterday's low. You dramatically lighter volume. Today we've only done 2 million shares. Yesterday you did 4.7. The swing point that we're talking about going into is huge, because that swing point we had 11 million. So your correlation is 11 versus 2. And here's the kicker. You didn't make it to the bottom of that strength, which is 1826. That's huge. Because when I looked at this chart yesterday, even the day before, I'm saying to myself, oh man, this is a mess. And the reason that I was going there was because of the fact there was only one bar that could really save this baby. And guess what? That bar saved it. And what does that mean? That means that more than likely, whoever was the buyer down at that bar coming into it, they come back into it. That's where the support is. That's where they're trying to drive it higher. That's kind of how that whole thing does shake out. So we'll see where this whole market, you know, basically ends up. But when we put those together, the way that is working out is that that's saying that King Dollar, okay, has finished its counter-trend bounce. So this is going to be wild just watching this whole thing shake out, because there's no doubt that if in fact King Dollar has finished its counter-trend bounce, what you have is that you have a monster ABC structure on the way down, because the volume characteristics are in place for a very large ABC structure on the way down. Your A point on this is 100.76, and your B is 93. Let's call it 94. So you get $6. That would bring you down to the 92 aspect. And, well, we just come off 93.17. It brings you down to the 92 aspect. That's a 1-to-1 ABC structure on the way down. It looks to me that on a longer-term basis, whether 2-3 months from now, King Dollar wants to get into that $88 price point. That's how that baby is set up. If we do go over to, and if you want to see the little correlation here, and I'll put this up, if you go over to the UUP. Now, the UUP, folks, trades, it's really cool when you do these correlations together, because the UUP is the power shares of the dollar index. Now, it trades big numbers. Every day it's 2 or 3 million. So when you look at that correlation, it's like, okay, how are we setting up here? Well, it's the same deal. We had come down, and we come off those highs. We come off those highs with vicious volume. You're talking about coming down with 6 million shares, 5 million shares, 6.2 million shares, and even yesterday, the most it could get glean was 3.4. Today, you got higher at 2.1. It gave it up. And what is it doing? It's going right into the initial downdraft that had been out there since the highs were established March 13th. You know, the high was established on March 13th. Your initial downdraft was March 18th. March 18th, you had the low was 25.77. We got to 25.68 today. That's what's stopping it right in its tracks. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are up 133. Nasdaq's up 76. Nasdaq's up 72, rather. S&Ps are up 17. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Coming into this close, you have the Dow Industrials up 0.8%. S&Ps are up 0.9. Nasdaq's the number out here, folks. Nasdaq's up 1.54%. Volume-wise, what we have is this, is that on the NYSE, that's going to come in around 650 million. You went down yesterday on 811 million. So the NYSE doesn't have it. Nasdaq, you're gonna come in with some juice. Nasdaq, we're at 1.7 on the way down yesterday. This very well could come in at about 1.8, and we'll see how that shakes out. But bottom line is that that composite right now is at 5110, and that would be a closing high. It looks to me like the closing high 5092. Yeah, 5092 looks like it. 5092. So right now you're over that closing high. Inside the three Qs, the NDX 100, that portion of the NASDAQ, that's also going to be a closing high. We've done 24 million shares thus far. The closing high has been basically looks like 110 something. And right now, 110.38, we're at 111.07. You're pushing in into that aspect with 24 million shares. The IWM, we take a look at the IWM, the small caps out here. Small caps, they have price going. They don't have the juice behind them, however. And the small caps are pretty, well, we're at 124.86. The highs in the small caps are at 127. The S&P, if we go back to the S&P, what you do see inside, actually the Dow Industrials. If we go back to the Dow Industrials, this is what is going to be. The Dow Industrials right now are basically off this high, not a huge amount, okay, but enough, meaning that it's unusual that, there we go, let's get this baby up. We're at 18,188, and the high that was generated out there, the first one I'm going to use is the 288. So you're at another $100. And that's after coming down with some juice, going back up with lighter juice, and we'll see how this comes into the close. But if we do come into this close and there's a zero sell-off into the close, which it looks like there's going to be, this little baby, particularly the NASDAQ. The NASDAQ can make the run for the highs. Dow Industrial's $100 away from it. That necessarily doesn't have to get up into those levels. And inside the Dow Industrials, what was putting the strength inside the Dow Industrials today is that it's all tech. First three, Microsoft, Intel, and Apple. If we go take a look at Apple, what we do have with Apple right now, Apple had gone south yesterday. We moved down with 70 million. You're up with 39 million. 39 million is going into 118 million. That 118 million that was generated off its high. That was on the 28th. I believe that's when Apple might have come out with numbers. Apple had opened up at 134, traded down to 129, closed out at that area. Has real juice inside it. Right now we're at that 132. So it's like that also can basically get up into and hit that high. We'll see whether, if in fact it's going to. The XLF, let's go take a look at the financials. We do have with the financials now, no matter how many scandals and, basically cases the financials come up with, they're still in the same consolidation. The high in the XLE right now, XLF rather, we're dealing with is 125.14. It looks like the financials actually won't even hold coming into the close out here. We're at 24.84. It goes 3 pennies lighter, and that's not going to hold the highs of yesterday. So yesterday we had come down with 44 million. You're up with 22 million right now. And if we go take a look at JP Morgan Chase, she's at highs. Berkshire, BRK. Berkshire Hathaway is the largest weighting structure inside the financials now. And Berkshire is way off its highs. Berkshire, we're at 144. That high that was generated out there in Berkshire was generated in December. That's not that it's only $6 higher, but you have to go back to December. Berkshire Hathaway has been on a sideways move for quite a while. And we put this, the transports, let's just see what the transports, because what you do have, the first sector that actually got into a bear market, meaning down 20% off the highs, was the transports, the airlines in particular. Transports out here, still no juice inside the transports. We're at 84.48. That high out there is 93. And the airlines, they get a small dead cat bounce out here today, but that's about it. What is intriguing, of course, is that with the price of oil coming down dramatically, it's like, okay, what is the problem with the airlines? And, it very well could be that they actually don't have a problem, that things are just so great that they're putting more capacity on. And, capacity, of course, does what? For the last few years, every airplane I've been on is full. I mean, jammed, right? No center seats, no nothing. So if they do bring capacity in, that's going to make a huge difference. But what we do have inside those airlines, if you take a look at United in particular, United is trading back where it was in October of 2014, and it only has to be down 2 more points to be back where it was trading in January of 2014. So you can see it's trading at the October levels right now, and what it does have. And this is where, this is really bizarre. This is where this whole October 15th thing comes back again, because it's making its way down to its high volume October swing point. The high of that is $45.45. And, what we did out here today is that we reached 52.25. It's basically building some cause to get into those lower prices. And we'll see how it basically comes into those lower prices and see how it hits those lower prices. We go take a look at the euro, because we know that the correlation inside the there she goes, inside the dollar basically went to the 0.618, gave it up slightly at the 0.618. If we take a look at those at the euro, this is what you have. The euro right now is trading at 109.02, and that got back inside this range. The range, once it got back inside 108.68, it's like, okay, bottom line, you want to start making the way up to 109 again? It very well can. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're going to be coming back with some numbers. Dow Industrials are up 134. Nasdaq's up 76. S&Ps are up 17. Gold is flat at 1186. You got silver at 1668. Bonds, the 10 years 127.29, 30 years 156.16. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. It's a good one. Market-wise, let's take a look at it out here. We had the Dow Industrials up 121, NASDAQ up 73, S&P's up 16, gold contract flat at 1,187.10 an ounce. What gold did out here, folks, is this. You had gold have wide price spread yesterday, accelerated volume, got under that today, rejected lower price. Now what we need is basically a sign of strength inside the gold market. Silver, down 7 cents at $16.67. Platinum, off $8 at $1,118 an ounce. Copper down 3.5 pennies at $2.81 a pound. Light sweet crude down 41 cents, trading at $57.62 a barrel. Bonds, the 10-year flat, 127.29. 30-year up 10 ticks at 156.17. Now, both the bonds, 10 and 30, moved higher. Well, the 10 was flat. 30 was up 10. They both had volume behind the move yesterday, and they had volume today. So what that's saying is that the bond market wants to hit the swing point, which is only about 10 ticks higher in each one of those markets. We'll see whether they basically bonds want to actually go up to their highs and/or is this a counter trend bounce? It looks to me like it's a counter trend bounce, because what has happened is that as we had gone higher yesterday, when you have real strength behind the market and you're right next to a swing point, it should be able to get it. But bottom line, I suspect we'll hit it tomorrow. King dollar. King dollar down 27 ticks, traded at 98.37. What King dollar had done, folks, is this. Now, this is going to be really intuitive, looking at where King dollar is, number one, and is this the end of the counter trend bounce? And it's pretty amazing what we did. King dollar traded up to a price point today of 97.88. And from the move down to the move up, I'll put this on the charts right now. If you're watching Tiger TV, what you're going to see is this, is that when King dollar came downtown, the high that was generated in King dollar goes back to the 13th of March. That high was 100.78. You did the first leg down. First leg down brought you into this 97.68 area. That leg was finished in March 26th. You did a counter trend bounce. You know, you got up to the 100 point again, 100.27, which is pretty intense because 100.75 is the high. Then what do? You go straight down again. You go straight down from 100 until about 10 days, well, 3, 6, 7 trading days ago, 93.17. Now, we come off of that. The 0.618 retracement is 97.827. And we did 97.880. Now, it was so intriguing, you know, being in front of a machine intraday when I was watching this coming up to it, and sure enough, you could see the first sell off of that intraday. You know, because when you're looking at the dollar looked, you know, strong, was strong like bull. And then all of a sudden, guess what? Hits that number. That number was hit at 9 o'clock this morning, and by 9:50 this morning, you had sellers come in that number. And what you do have inside that market right now, you'll see how these sellers came in. You know, the first get-go, each 10-minute bar, they kept accelerating on the way down. And what we do have right now is that the low that was established out here today, which was that 97.05 number, there's juice down there. So this dollar, I suspect what you're going to see overnight is that it's going to run into those numbers overnight. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So we take a look at the SPY. The SPY right now, folks, you're at highs. No juice behind the move, but bottom line, brought it all the way back on price. Right now, you're at 212.70. The high out there is 213.78. More than likely, guess what? We're gonna hit it again. That's how this is shaking out. The Qs, the NDX 100 was the strongest indice out there today in a huge way, not in a small way. And what you had is this: is that we did volume of 28 million. You're up $1.76. You're at a closing high. Inside the NDX 100. Well, here, now let's go to the composite. Actually, go to the composite itself, also closed at a high. The composite closed up $73. If we go back to the NDX 100 for a second, what you're going to see is this, is that at 1:50 Eastern Standard Time today, you had Broadcom. Basically, news came across the tape that there's a rumor that AVGO wants to take over Broadcom, and Broadcom intraday went up 20% in a heartbeat without being halted as a stock, which is pretty amazing. AVGO, that did the exact same thing. AVGO closed up $10. That went up about 11% simultaneously. That, needless to say, if we take a look at, I'll put this, the 3 Qs inside a intraday chart to see what kind of juice that you got inside that market, and that market at that 150 was pretty dramatic. There's no two ways about that. What you had out here is that little baby had jumped from a price point of 110.50, and it was up to 110.81 on about a heartbeat. You know, so there was definitely some juice that's underneath that. If we go take a look at the IWM, IWM is hanging right out there at highs also. The IWM right now is trading at 124.77. And the highs, you know, the IWM only made it last time to the 125.46. So we'll see if in fact it can get up and over that. The high of the small caps is a lot higher. Well, not a lot higher. It's 127.13. Last time we were up here, though, what you had is that number, the 3 tops on the IWM have not got pierced yet. You know, so we'll see whether that is going to change. Some of the high volume stocks in this low volume market, Michael Kors was the one that got absolutely toasted and roasted today. That was down $14, or what's that? That's almost 25%. Yeah, it is. You had Broadcom, that was up 20%. That was up $10. Apple was up $245. You had Microsoft up $102. Qualcomm was up 166. Inside the Dow Industrials, now the Dow wasn't that strong out here, but what was putting juice inside it were the 3 tech stocks: Microsoft, Apple, and Intel. Inside the NDX 100, that was all about BRCM, AVGO, and what is surprising, you know, particularly for the aspect of the NASDAQ, because the composite is at highs, that was without the IBB going to the ceiling. You know, the IBB was up $6, but that's how that likes to trade. That's either trades up $6 or down $6. The IBB, which is the biotech index, is trading at 366 right now. That high is 374, and you know what? That high is going to get hit. Light volume out here today, no doubt. We're at 366.96, but you got over the downdraft. That had been out here on the 27th rather, 27th of April. The IBB went from 365 to 347, monster volume on the way down. You did 4.3 million, you did 1.3 on the way up. That means it's going to tag the high. That means you're at highs once again. With what? With light volume. What is that? That's distribution. But each and every time that you get up there, folks, bottom line, what do big operators get to do? They get to push large amounts of stock out at advantageous prices. And then what you see on the way down, of course, there's not enough room for folks to get out of the marketplace. Some of the Dow stocks out here, we had Caterpillar flat. Boeing was up 20 cents. You had Coke up 13 cents. Not a lot of movement. Big Blue was up 187. You had 3M up 143. Inside the oil market, actually, let's go over and take a look at the actual oil contract. We'll do that as soon as we come back. Oil contract was trading down 39 at 57.64. Dow Industrials finished up 121. You had the Nasdaq up 73. S&Ps are up 15. You stay right there, folks. Come right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And what you had out here today, folks, news-wise. Okay, this is a real trip in itself. There's no doubt. The World Soccer Federation, they got them basically. This has always been basically like a crooked deal, no doubt. For But there's so many allegations going back and forth out here today. It's pretty amazing. Meaning that how many suitcases full of stacked, nice, neat bundles of $10,000 stacks were up for folks to get the World Cup. What's out here, though, and that's not the part that I want to talk about, because this is what just come across the tape, and I want to show you something here. This is going to be wild watching this shake out. So what happens inside inside the indictment, there's a, oh, where is she? One second, let me find this again. Okay. Because this happens to be, I got a feeling this, okay, so here it is. The indictment of the soccer officials by a U.S. grand jury says an unidentified sportswear company bribed a Brazilian soccer official for sponsorship deal, the deal which seems to mirror a one obtained by Nike. The indictment refers to a U.S. company that signed a partnership with the Brazilian Federation in 1996. Nike, based in Oregon, announced its Decalogue Pact with Brasilia that year. Nike believes in ethical and fair play in both business and sports and strongly opposes any form of manipulation or bribery, the company said in an email statement. Okay, now let's just get over and look at their stock. You know, Nike, listen, Nike, great company, no two ways about that. Bottom line, though, what you do have is that this aspect of pay to play is in many industries, and you know, whether you get hung up on it or not, it makes a huge difference. Now, when we pull Nike back, if I put this on a weekly basis, this I always love doing this when the aspect that something can be on the agenda. You know, on a weekly basis, Nike still wants higher price. So this is going to be wild watching how this shakes out. That is the allegation that far back, or nothing is going to happen? Because what we have is this. Nike is actually in an ABC structure on the way up. The A point on Nike goes back to its sign of strength on the 22nd of September. That low is 79.27. Your B point is up here at 99, so you're talking $22. Your C is 92. Oh, I see what it just did. It just finished an ABC structure on the way up. So it literally, 92, 102, no, 112, 114. 114 is your ABC structure on the way up. You're at 105.02 right now. So it looks that no matter what comes across the tape, and that literally, the Nike news just came across the tape, folks. That's how this just thing came across the tape. But you know what? Nike looks like it wants to go to higher price. That's the way that is also set up. The NASDAQ composite rallied the most since January closing at a record as Broadcom led the surge in technology. I believe that actually what we're going to have here, I'll look at this for a second. I believe this is a closing high period. It's hard to believe that if we bring this up, I'm going to bring the composite back 20 years, and I believe what you had, the composite itself, the high in the composite is 51.32. So this will get 51.11 we hit today. Okay, so check this out. So in March of 2000, we had hit 51.32. However, it never closed like that. You know, by the end of March, we were down at 4,300. So, you know, you talk about taking it, yeah, and then the end of April, you were at 3,200. That's pretty intense. So when we had hit the high last time, within 4 weeks, we were down 2,000 points. That's intense. Okay. But that being said, bottom line, you're at highs right now, at closing highs. If we take a look at this, now let's put this up. We'll bring this back. We'll bring this back 20 years. And you put the volume characteristic up. This gets really interesting. So 572. Listen to this. This is a trip. Okay, so check this out. This is 20 years later, too, right? 19. Is it more than 20 years? No, it's 15 years later. Okay, so 15 years later. We had hit the highs, folks, okay? When we hit the highs with 721 million shares on the monthly. Right now, last month we did 569. We're not even going to do. This is crazy. Because we know that volume, so check this out. This is what's pretty cool. We know volume has expanded as markets get basically over the years. Most of them do. That's because there's more people, okay? Bottom line is that now we're coming up to these highs again, and we do not even have the volume characteristic that we had at that high, which is pretty intense, man. I wasn't expecting that. I was expecting that, you know, you back that far, it would make sense that you could get more volume generated than, in fact, we had at those highs. But bottom line is that we haven't, and we don't. We did 721 million shares. Last month we did 569 million. It's way too early in the month right now. No, it's not. Oh, this is going to even be better. Let me see. We're at 27th. We have trading day-wise, let's see this quickly. Where we're at 27th. Yeah, oh, look at this. We're not going to make it. So this is what we have. We're at 469 million, and we have 3 trading days left in the month, right? No, 2 trading days in the month. So you're at 469 million. 469 million is going into 721. 721, 469. We did 30 today. Let's add 60 to that, 9. So 512 versus 521. And last month we did 569. So that's still saying that bottom line is that it's anemic volume after that many years, which is just, that's a twisted deal, folks. You know, the SPYs, same type of deal. The SPYs are, you know, no one's in the store. The volumes have been coming down dramatically. We've been, the SPYs have been at the same price. This is the 6th month that we're at the same price right now. And it's certainly not with volume. You know, sideways move. We'll see whether the NDX can break topside out here tomorrow, because the NDX absolutely has a shot to do it. Where the NDX is going to have a little problem, not a problem, but because of the aspect of how Broadcom and AVCO put so much juice into the NDX 100 today. They put the juice into it in a dramatic way, because what you did have, now the NDX 100 was still up a good 40 points, but we ended up being up 62 points, bringing it up and over there, accelerating the momentum coming into those highs. And the NDX, no doubt, had it. What you can see also inside the Dow Industrials is that inside the Dow Industrials, you also had the tech stocks bringing the Dow Industrials up to higher price. The leader out here inside the Dow Industrials, let's just bring this up. The leader was Microsoft, MSFT. You know, Microsoft traded up $1. 26 million shares were traded out here. We're at 46. That's still not enough shares in order to sustain higher price. You stay right there, folks. I'm Mr. Chris Gaffney, the president of Everbank World Bank, is going to be coming back. We're going to be talking markets. We're going to be talking currencies. We're going to be talking market-safe CDs. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 121. NASDAQ was up 73. S&Ps are up 15. And right now we have our man, Mr. Chris Gaffney. Chris, folks, is the president of Everbank World Markets. You've heard him many times on TFNN. And as you're either driving in your car, don't go over to the web right now. But guess what? The program is archived. You can get it 24 hours a day. When you get home, go to TFNN, hit the Everbank banner. That's one way of doing it. Another way you can do it is you go to everbank.com/TFNN. And what's going to be brought up is that you're going to see Everbank personal page. Inside of that, you're going to see banking, lending, investing. Well, you hit that investing tab, folks, and what it's going to bring up, it's going to bring up a lot of different diversity inside the investment Empire. We're going to talk market-safe CDs right now with our man Chris Gaffney. Chris, how you doing today?
Doing great, Tom. Thanks for having me on.
It's great to have you on again. You know, when I was looking at this, well, first off, you know, the market-safe CDs, I know this is a second round, which is, and it's going to, I guess, be the final round, right?
Right. The first one was very well subscribed. In fact, we had such demand that we decided to offer another issue of that same what we call series, Market Safe series. It's Future Economies CD. So,
yes.
Yeah, the first one had a funding deadline of about a week and a half ago, and we went ahead and issued that CD already. So your listeners can now get into this will be the final issue of the Market Safe Future Economy CD.
And you know what's so cool? And what happens, folks, is this, is that you have a structure of a CD. It's only $1,500 to open up. It's FDIC insured, and it's IRA eligible. The thing that is so intriguing, you know, to me, even when you were on before, and that's why I think that you had such a demand for them, is that, you know, the dollar had been on a streak going higher for almost a year and a half. I mean, you know, and listen, yeah, it can go up for 4 years. We know that, but it's very unusual for any currency. You know, currencies like trending, you know, and this trend had started a long time ago. So I can see.
That is so true, Tom. I mean, currencies move in long-term trends, and as you said, we're currently in a dollar strength phase and have been for a while. And what that does is it gives investors an opportunity to get invested into the currencies at cheaper prices than they would have, let's say, a year and a half ago, and take advantage of the value that's there. And, you know, the unique part of this CD is that you're guaranteed to not have a loss in it. So we guarantee you'll get your principal. If you put $1,500 into this CD, the worst you can do is get that $1,500 back at the end of the CD, no matter what happens to the currency market. So it's a risk-free way to invest into what can be some pretty volatile currency markets.
Yes, and the funding for this, folks, is now. You can do it right now, up to June 11th. Okay. Right. One of the phone numbers that you can call to get some explanation here is 855-750-4051. But Chris and I, we're going to break this down for you right now. So it's so cool. As we're talking, Chris, on Tiger TV, I got the currency breakdown. So talk to me about how these currencies work, because this is really cool how this is. Each currency, folks, is broken down to 16.7 of the CD, I guess.
Yeah, it's 1/6 of the CD. So it's Brazil, China, Indian rupee, Indonesian rupiah, Mexican peso, and Turkish lira. So there's 6 different currencies evenly weighted.
Yes.
And what's going to happen is over the life of this CD, which is it's a 5-year term, over the life of this CD, we're going to take the average performance of each of these 6 different currencies and then average those together, and we're going to pay the holders whatever the average upside is in these 6 different currencies. And one unique part of this structure that we've come up with is that if the average performance of these currencies is above 0, so if they have a positive return but less than 10%,
yes,
we're going to go ahead and pay the investor 10%. So we're going to pay in principal plus 10% if the average is somewhere in between 0 and 10. If it's over 10, we're going to pay over 10. So it's called a jump note. So if there's any bit of a positive return on this, we're going to just go ahead and pay 10%. And then if it goes over 10%, we're going to pay that additional also. So that is, you know, one of the unique features of this. It is IRA eligible, as you suggested, FDIC insured against any bank failure, not against currency fluctuation, but it is insured against, you know, you cannot lose money. So we're going to pay you back your principal no matter what.
Which is huge. You know, what's so intriguing too, Chris, is that, you know, and I've seen, and you know, I'm sure folks you've seen EverBank ads. They have a lot of different departments, a lot of different ads, and when I look at the aspect of a CD market in general, and we talked about this last time, it's like when you can have something that you can actually get your money back, and that's why people get into CDs. There's no doubt about that. But then when I look at the aspect, like a 5-year CD, I don't know what that number is right now, but maybe is it what, 1%, 2%? Would that be?
A little less than 2, yeah.
A little less than 2. When I look at an aspect a little less than 2, and then I say, okay, well, hold it. I can give up the aspect of making a little less than 2, and maybe get more than that, but at least get my money back. That's a creative, safe investment.
We just had a market safe mature on Monday. In fact, we paid them out yesterday. So we just had a market safe mature that was put on 5 years ago. It was diversified metals, so it was a different structure.
Yes.
But it was based on the value of metals over the time period. And those investors got an excellent return. In fact, they got a little over 21% return on their original investments. Plus, the metals had actually, it was an averaging, so the metals had actually fallen back below the price that they originally invested in. So, that's not saying that the future economy is going to give the same performance, but I just use that as an example of averaging worked for those clients.
Sure.
And the averaging that we do, these emerging currencies are very volatile and can swing wildly among the days, and it's kind of it can be a nail biter if you own the individual currencies outright, because one day you're up big, the next day you're down big. By putting them all into one CD and by putting that into a principal protected CD, I think it's a great way for investors to get exposure to emerging market currencies without risk.
And you know what? You know what's cool is that you're speaking to a lot of equity investors out there also. And when I was just looking at this and you were doing the breakdown, I'm saying to myself, this is really neat, because what you also have is that there's plenty of folks that probably own equities that are Chinese equities. There's definitely folks that own Brazilian equities because of the fact, it's a big commodity market. Sure. You know what I'm saying? And there's plenty of Indian equities out there. I'm not sure, and that's a nice way also of taking a portfolio and having a true diversified portfolio that you're saying, okay, I think that, maybe these could go up, but you have no downside and you've got all upside. And if you own some of those other equities, that's a great way of leveraging, basically getting that, not necessarily totally delta neutral, but, you're basically neutralizing the positions out.
Right. And on this one in particular, again, the jump note, which is kind of unique,
that's huge.
And that if there's any sort of a return, you're going to basically, jump to that 10% over 5 years, which will basically give you what you would have gotten on a U.S. dollar CD. So if there's any positive return on these averages, then you jump basically to what you would have earned on a 5-year CD anyway. But again, with the potential of having a much greater return if the emerging markets currencies do well.
Sure. And folks, it's the initial is $1,500 to open, but that doesn't mean you can put in 50,000, 100,000,
yep.
Right? I mean, there's not a maximum. Okay, it's 1,500 is the minimum. Your principal is 100% protected. Your upside, it would be 10% minimum if it goes over that number. It's FDIC insured. It's also IRA eligible. Come over to our website at TFNN. You're going to see the Everbank banner. You can hit that banner. If you happen to be on the road, just remember, folks, everbank.com/TFNN. The phone number is 855-750-4051. Chris, thank you so much. We really appreciate it. And I love, I got to tell you something, man. I love how creative Everbank is, period. I mean, you guys are on the cutting edge, man. It's a good scene.
We try to be. We were built as an online bank, which was, out of the gates put us kind of on the forefront of technology and on unique products, and we continue to try to expand on that and stay in front of the markets as far as introducing new products.
That's awesome. Well, listen, you have a great one, safe one. Look forward to speaking to you again, Chris.
Thanks, Tom.
Thanks. Have a great one. You stay right there, folks. We're coming right back. This is Tom O'Brien. This is TFNN. It's everbank.com/TFNN. Be right back, folks.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And if you do want more information about those market-safe CDs, folks, you have until June 9th to fund it. It's a $1,500 minimum. It's a 5-year term. Just go to everbank.com/TFNN. As you do that, just go under investing. You'll see the market safe CD if you take a look at that. Now, if we go over to Broadcom. So Broadcom, folks, I suspect we're going to probably hear more about it tonight. The reason being is that what you do have is that they didn't stop either one of these stocks intraday when the rumor came out. But bottom line is that whoever was pushing it out, the market was believing this rumor to be true. Broadcom went up 21%. Now, so check this out. This is pretty intense. Broadcom right now is trading at $57.16. Now, the high in 2000, which we're back to in the NASDAQ composite, that was 180. Bottom line, you know, it's not going to go to 180 because wait to hear this number. At the price that it's at right now, which is $57.16, excuse me, folks, that puts a market cap at $34 billion on Broadcom. That number, okay, values Broadcom at approximately, it's almost like 27 to 30 times earnings before interest, tax, depreciation, and amortization over the last year. That number, folks, is over 65% higher than the medium multiples of any of the recent chip-making deals. So you can see, you know, the last big deal that was announced out there was when NXP took over Freescale Semi. That was a $16.7 billion deal. That market, that was at 16 times EBITDA versus this one running at about 25 times. So I suspect the bottom line is that you talk about selling at the right time, they're selling no doubt at the right time because that number is extraordinary. Now, what they're looking for, there's no doubt what they're looking for. What AVGO, they're a Singapore-based maker of semiconductors. What they're looking for has to do with the wireless capacity inside Broadcom. That's their node for. And everything is going wireless, folks, okay? That's the bottom line. That's what, you know, AVGO is basically looking for. And there's no doubt that this is one of the largest basically ones out there. So we'll see how this shakes out, but I expect what you're going to see is you're going to see this deal more than likely done, you know, well, announced tonight. Now, that being said, there's not a number on the deal, okay? So what I expect you're going to see out here tomorrow morning is that because Broadcom and AVGO were the leaders inside the NDX 100 today, it's really unusual when you see actually both the acquire and acquiree go up simultaneously. It has happened, and it's happened, you know, in the last month a couple times. That is unusual in that aspect because most of the time what ends up happening is that you'd have AVGO move to lower price versus Broadcom. Technically, though, what you have is that because of the way that they moved out here today, you know, technically it's set up that, hey, guess what? They both move with wide price spread. They both move with accelerated volume. It didn't get the rest of that sector going, but you know, what it did do out there is that both of those individual stocks, you know, went with, you know, some force. There's no doubt about that. If we go over and we take a look at Texas Instruments, that little baby is a dead cat bounce. You know, that's in the same. They'll probably get hurt more than anything by this thing. Texas Instruments is off its high of $59. You're at 55. It's going into a gap. You know, it had the surge. At 150, you know, these chip stocks definitely had the surge. There's no doubt about that. That's not enough of a surge, though, in order to basically get over the downdraft that has been created inside Texas Instruments. So it looks like you're going to have a bunch of new players out here, and we'll see exactly how far they can push this whole baby out. What you can expect in the morning is that the DAX, folks, the DAX in Germany was what started, the whole move forward out here this morning. If you were looking for news in our markets, they weren't there. What you had is that the DAX had gone from a price point of 595 and just took off and went topside to 771. As that DAX was going higher, that drove our own S&Ps, particularly the NASDAQ, though. I've said this many times. The DAX love trade. The NASDAQ loves trading like the DAX. And what we do have inside the DAX is that when that was moving, we moved down yesterday with 96 million. You moved up today, and we moved up today with 100 million. So the DAX is saying, guess what? It wants to go hit the swing high of yesterday, which is another 150 points higher, 200 points higher. So that setup is basically saying that this S&P out here tomorrow morning wants to try to go after the high once again. The cash S&P is trading out here at 21.23. That is over the 21.19, and the 21.19 is a good benchmark to keep your eye on. That was the first high that was established on February 26th. That's the number that you want to keep your eye on. We got over that and failed on the 27th of April. We got over that on the May 18th, and then we failed yesterday. We're going to get over that again. So the number that you want to keep your eye on is 2119.59. And we'll see how we get into that. As I said many times, when you get up and over equities or you go downtown, what you're looking for a true break upside or downtown is wide price spread accelerated volume. What the market is going to have a hard time doing right now, because the market has used a huge amount of energy going down yesterday, a good 17 S&P points, going up today another 17 S&P points. That's a huge amount of energy that has been taken out of the marketplace. It's going to make the run, and we'll see what type of energy it has to get up and over this 2134 level. So we were 9 points away from that 2134 level. We'll see whether the market has it in it to get up and over it. And as I said, you need that wide price spread accelerated volume. I do expect what you're going to see is that the dollar index looks to me that the counter trend bounce is over inside the dollar index. What that sets up is what? That sets up lower price in the dollar. Market likes what? Market does not like the dollar going down. Market likes the dollar going up. The bond market is going to be the wild card out here because what you do have inside the bond market right now, if we take a look at the 10-year, the yields are still at 2.12. Get a mortgage, folks. Do it right now. Refinance. Do all of the above right now because rates are going to be going up. In fact, they only can go one way. We know that. Don't wait for lower rates. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Go get them, folks.